Thanks, Barbara.
Thank
Well,
you.
hopefully that helped to answer your question. The question?
I think this question kind of follows upon that. Kathy asked tips on inventory records.
Tips on inventory records. Well, you need to be tracking everything. We divide on the record keeping, we have our fixed, which is 2 years or more, so that's usually where inventory goes, although um, we also have a category for the cost of goods sold. So if you were, and Craig, you might have to help me on that. If you're for doing animals, and that's, like I said, that's we haven't done that other than chicken selling the meat, but we'll carry over. For us, our inventory records would be the same, like I'm talking about in fixed, or we might buy 50 bales of potting soil because we start all of our own seedlings, and I might only use 25 of those this year, and then I would the excess would be carried over as inventory for the next year. I have web flats that the inserts of the potting trays go into that we grow in the greenhouse. The web flats carry over as inventory for the next year, but the inserts usually are sold with the plants, the pots. So anything that I have left over at the end of 2013 is inventory that carries over into 2014. I have, what am I carrying over this year? This year it's, I buy plastic bags on a roll like you see in the grocery store. I usually buy a case of those, and those are 1,000 to a roll. I might use a half a case in a year. I have different sizes of bags that if I don't use all of them, I track those as carryover as a part of my inventory. They're all products that I use, year to year, but I don't use all of them in one year. So it's just keeping track of it, but how you divide that up in your record keeping for what's at the end of the year, whether you go out there and count it or you're monitoring it. I'm sure if it was on a computer you could track it a lot easier, but I'm still doing everything the old paper binder way. Craig,
So,
Barbara?
so specifically in terms of record keeping, Kathy's has a second question that she's following up with. She wants to know if you have one big envelope for your carryover items, or do you have that in a ledger? Is it written down somewhere?
It's yeah, it's on a ledger for I guess it's the I'll copy what was in 2013 that's carryover into my 2014 records. And if sometimes I will make a copy of those receipts because you're going to need the receipts for the next year. I just always, when I first went into business, I took a class from the Small Business Administration, and one of the things they had, and this was 25 years ago, they had a tax lawyer there saying, this is what I'm going to do if I do a tax audit of your business. And that scared me pretty good and made me really track my expenses, because as he went through what he would do, what he would look for as far as record keeping, made me really pay attention. So, for example, if I have a receipt for $500 from Costco and only 150 of that goes to my farm costs, I'm only taking off that 150. And if that 150 is a carryover from 2013 to 2015, I might make a copy of it and write on that copy receipt in 2013 cost of goods sold or 2013 inventory, and carry that over to 2014 so that I know. I always write on my notes and in my ledger where the receipts are, because if that audit ever happened, I've never actually I've been audited by the IRS twice. What are the odds of that? Both times they owed me money, but it was only because I could prove it. So hopefully that you can't ever keep too good of receipts with that. So whether you do it in an envelope, I keep a notebook that I rotate every year, and just do that carryover. So if the whole receipt doesn't go, you just got to track it. You got to be able to track it and find it if you need to.
This is Barbara, and I'm going to interject some more, agreeing with everything that Diane has said. And some of this goes back to whether you are using the cash method or the accrual method of accounting. And I see far too many people who are using the cash method, and cash method is the simplest, and it's about what goes in and out of the bank. What goes in is your income, and what goes out are your expenses, kind of end of story. But in reality, we all have assets. Most of us have inventories. Most of us have accounts payable and accounts receivables. And those all are going to only be reflected in an accrual system. So an accrual system is much more accurate, and it's often required by the IRS. And kind of getting back to the inventory part of it, inventory changes can really have an effect on your income and thus your taxes. A couple of things about inventory. If you're buying supplies in general can be expensed in the year that you pay for them. And if you're buying a big piece of equipment, that is going to be depreciated and go on your balance sheet instead of your expense statement. And all that goes on the expenses is the depreciation part of it. So inventory is the things that you are buying that you're going to resell, such as maybe chickens. Another example might be that garlic that's hanging in the shed and drying during the winter, or something that you are producing, like the eggs. And typically the eggs have such a short shelf life that you're not going to be keeping track of them in inventory. But the lambs are, and one of the things you need to do when you're getting ready to take an inventory is make that list of what it is that you have on hand as of, let's say, the 1st of January or whatever that point in time that you're going to take that inventory, and make that list of what you have on hand, and that list needs to define a specific, I mean, it might be a part number, it might be a breed of chickens at a certain age, and then you have to value them. And maybe that's the value you paid for it, or maybe it's the value of your investment in it, or maybe it's its market value at that point. And so, I mean, there's a whole lot of choices going on when you're talking about inventory. But you put that count down, you put that value on it, and as of that point in time, that's what your inventory was. And I tell you, unless you're in the auto parts business or a very large business, most of the people that we work with are not tracking their inventory through QuickBooks. Most people are using QuickBooks, but the inventory tracking gets, there's a lot of paperwork involved in that as to what's gone in, what's gone out. And if you're manufacturing or producing, in this case on a farm, it gets even more complicated. So that end of the year actual count, and once you've made that list, it gets easy to update, is going to be the probable source of your inventory.
Yeah, the bottom line there is just track it, keep track, write it down, and you have to come up with some method. And as long as you're writing it down, and like I said, copying receipt from one year and noting it to pass it over, whether you put that in an envelope I mean, I want to improve on what I'm doing for sure, but good point, Barb. And Barb's going to go more into this in her time. Do we have any more questions? And if we don't, we'll move into Barb, and she can go into more details. Because I know you got them.
There's a couple questions that I think are more appropriate here, and some of those that relate to inventory and where to account for the cost I'll hold until the very end in case they do get answered in Barbara's talk. But there's a question that specifically came related to gross profit analysis, and so Janice asks, I have sheep and goats. They eat in the same pastures in the summer and the same hay in the winter. How do I figure out which enterprise is more profitable?
That's for you, Craig.
Okay. Well, you would, comparing your sheep and your goats, you would look at how much, you'd have to estimate how much hay, if you're looking at hay cost, or, and you'd have to estimate how much hay went into each. It went into sheep, went into the goats, and so that would be, you could base it on numbers, or you could come up with percentage of how many there's different ways to come up with that calculation, but you would have to split those costs between the like say hay costs would have to be split between the two, and so that you could get an idea of what what the profitability of each were. And if you're you wanted to get on if you were grazing them and you wanted to come back to a per acre basis, again, that would be maybe that would, if you're grazing them together, and maybe that wouldn't be the best evaluation for the same for the per acre basis of evaluating sheep and goats. You may have to do it on a well, it may be tough to be per time as well, but per dollar, you might have to do it on a per dollar invested. There's another way you could do that as far as evaluating the two enterprises, but you would have to figure out a way to divide those costs as best you can.
Okay, thanks, Craig. I'm going to hold the other inventory-related questions until after Barbara's given her presentation. So let's go ahead and
I guess we'll move it over to Barbara. Thanks so much for your questions, and you can always email me or follow up on the discussion board as well. I'll be checking there. But Barbara's got some nitty-gritty stuff to share with us, so she'll take us to the next level. Thanks, you guys.
Thanks, Diane.
Just this is Craig. Just a second. I don't have. Do you want me to just move your slides, Barbara? Because I don't have. For some reason, my the little thing for switching the presenter over is disappeared off my screen.
Okay.
So
yeah.
I can move it. I can move them for you if that works okay with you.
You bet. And if you haven't moved them fast enough, I'll just say slide.
Okay, that works.
Okay, we're ready to move along. I work for the Small Business Development Center at Lewis Clark State College. Go ahead and slide over to the next one. We provide business consulting services at no cost. There are small business development centers located all across the nation, usually at institutions of higher learning. We also provide affordable workshops and business information resources, research and student projects and things like that. We do recognize that your time is very valuable, and sometimes that's the only cost of getting the consulting that might turn out to be helpful to you. Go ahead and slide.